Good afternoon. This is Ross from Payroll HQ. We are just going to give everybody another minute before we commence the session this afternoon. We're expecting just close to 300 people at this particular Learning Lab session, and as we've just opened up the session, participants are dropping into the virtual environment. So just bear with us for 1 minute. Good afternoon, everybody. We will now make a start. Just a bit of housekeeping before we jump into this afternoon's session. Firstly, I want to confirm that this session is being recorded. So if anything does happen at your desk and you need to jump away, you will receive a recording once that's finalised. That's likely to go out tomorrow morning. You will also receive a copy of the slides. We are expecting a number of questions during the session today. Please type those into the Q&A area, and we'll do our best to answer some live in this particular session. Those questions we are not able to get to, we will download from the virtual environment. We will answer those one by one and share with the audience. So let's make a start. Again, thank you for joining us for this month's edition of the Payroll HQ Learning Lab. In today's session, we are joined by Jasmine Fernance. Jazz is a senior payroll consultant at the Australian Payroll Association. In today's session, we will look at the key changes that we've seen in the payroll landscape in 2019. We will then turn our attention to what changes we can expect to see in 2020. Towards the end of the session, Jazz will then share a few hints and tips on how you can safeguard your payroll environment, helping protect the financial wellness of your employees and more broadly, your organisation's payroll experience. So I'd like now to hand across to Jazz, who will take us through her session. Thank you.
Thanks very much, Ross. It's great to be here with you today. As you mentioned, we're going to be doing a little bit of a year in review with payroll. As we know, payroll is an ever-changing landscape. Nothing ever seems to stay the same. So it's always important to be across what has happened and also what might be coming in the future so that you can prepare. So some of the key changes that we've seen this year. The first one would be it's our first year reporting with single touch payroll. Now, STP is probably the biggest change that we've seen in payroll in a decade since the introduction of Fair Work. So most employers, or most of the larger employers, had their first year of reporting year-end with single touch payroll, with some still coming on board from the 1st of July, and all medium to small businesses required to report from this year. So one of the biggest changes that we've seen. And certainly from what we've heard with the ATO, their first focus has been on superannuation. So they'll be looking at data matching what we're reporting to STP versus what the funds are reporting that they've received. So that is their first priority, is to ensure employees are actually receiving their super. One of the other changes we've seen this year is Victorian Portable Long Service Leave. This scheme came in from the 1st of July 2019 for those who are in the community services industries, contract cleaning industry, and the securities industries. So if you're in any of those industries and you aren't yet aware, you might want to have a look at that. Quarterly returns are now required to be sent to the Portable Long Service Leave Authority in Victoria, and the first return was due in October. So for those in those industries, that's a big change for long service leave. One of the other changes that we saw from the ATO was in regards to tax deductions for payments to workers. So as we know, when we pay employees salaries and wages and everything that goes with that, those payments are deductible for a business. However, new legislation states that if you fail to meet your PAYG obligations to the ATO, then you cannot claim a tax deduction for any of those expenses to your employees, which is obviously a business's probably largest expense. So it's a massive change. Those obligations are that you have to withhold the amount from the payment before they pay the worker. So you have to make sure you actually are withholding PAYG and that you're reporting that amount to the ATO. So if there are businesses out there that aren't meeting those obligations, they're going to have a much higher tax bill from the ATO. We've also had the ongoing four yearly review of modern awards. So these commenced in 2018, the 4 yearly review, and it is still ongoing. And every week or so, we're getting updates to some changes in some of the awards. One of the bigger changes this year, which was updated in every award, were public holiday substitution rules. So they used to say that an employer could substitute a public holiday for another day if the majority of employees agreed. That now has been changed, that each individual actually has to agree to that substitution. And if they don't agree, then the original public holiday date remains. So that was one big change that applied to all awards. There's also, most awards were updated last year to include clauses on when termination pays have to be made, usually within 7 days. And the remaining awards that hadn't yet been updated were updated this year. So make sure, again, that you're checking your award to determine when you need to make those termination payments. The last two we're going to look at a little bit more closely. One is the tax treatment on redundancy and the other one is your personal leave entitlements. So tax treatment on redundancy. This one received royal assent, this piece of legislation, on the 28th of October, so it's very, very new. The old legislation stated that if the employee had reached the age of 65, then they were not entitled to a genuine redundancy payment. And what that means is that we're not entitled to receive the tax-free benefit of that redundancy. While they were still able to receive a severance payment, they wouldn't get the tax-free benefit. The legislation has been updated because the pension age has actually increased from the 1st of July and it's now 66 years. So the actual legislation now states that the employee has to have, must be below pension age at the date of redundancy. If they're over their pension age, then they do not get the tax-free treatment. So that will change depending on the date of birth of the employee. And probably the big one that had everyone talking this year, and it certainly had some robust discussions in our office, and that's the interpretation of personal leave and the entitlement in the Fair Work Act. This was a case that came through the courts, was Mondelez, which are a food producer down in Tasmania, whose employees basically were shift workers working 12-hour shifts, and they claimed that they should have been receiving 120 hours of sick leave because they were doing 12-hour shifts and they were entitled to 10 days of personal and paid personal leave. The company disagreed and said they should only get 76 hours as per the Fair Work Act. But the courts came on the side of the employees and absolutely confirmed that the Act says it's 10 days and a day is simply a day. So the implications to payroll for this one have been huge. What it does mean is not only are shift workers impacted in that they would get more personal leave, but it also impacts part-time employees because it has been deemed that regardless of whether you're full-time or part-time, a part-time employee would also be eligible to their 10 days of personal leave. Now, we've had a lot of questions on this one over the last few months because this did come in August. One of the questions is, when is it effective? Well, it's effective from the 1st of July 2009 because that is the date the Fair Work Act came into effect. It's not new legislation, it is simply a reinterpretation of the existing legislation. And unfortunately, this is the interpretation that is the law at the moment, which we need to comply with. We do know that Mondelez and the federal government are looking to appeal the decision. That could take a significant period of time. We have heard some indication the appeal may be heard in March or April next year, but that's not definite or confirmed. And the original case took about 18 months to come through, so it could still be that amount of time before we see if there's going to be a change to that interpretation, or if it is as it stands. You should be speaking to your software providers about this to see what they're doing. I know some who are looking into how they can comply with the legislation to ensure that personal leave is accrued in days, and there are others that are waiting to see the outcome of the appeal. But Fair Work has been pretty straightforward about this and maintaining that it is the current law. So you really do need to be looking at what you're doing in that space. So looking ahead to 2020, as we've seen this last year, there's been a few changes, and one of the major themes from the last year has been the year of the underpayment. Headline after headline, each seems to be larger than the last. We thought the first few were pretty big, and then we had one of the largest ones a few weeks ago with $300 million in underpayments. So what we're going to see really is a continued focus on compliance in that area, and not just from the Fair Work Ombudsman, but we're also seeing a lot of interest in audit activity from companies as well, wanting to actually check how they're going in auditing their payrolls, checking how they're going with compliance. And when we talk about compliance, I mean, the major issues that we're seeing are compliance with awards and agreements and underpayments as a result of that. I can't remember the last time there was ever a headline about compliance with tax and people not being taxed right. It is generally always about those compliance issues with the awards, which a lot of companies have had difficulty interpreting. One of the other things that we're going to be looking at is the changes to superannuation and also the superannuation amnesty. So there are a few changes coming in there, and also some proposed changes to annualised salary clauses in some modern awards, which again will be a massive change once they come in. So superannuation guarantee changes. Again, this was another piece of legislation which received royal assent on the 28th of October. And it is changing the way that we are required to calculate the superannuation guarantee on our employees' salaries. So under the current legislation, if an employee salary sacrifices some of their salary to super, it is only a requirement for the company to pay the 9.5% super guarantee on the reduced gross earnings. So you do not have to pay it on the full gross earnings if they have a salary sacrifice. It's also currently the law that the employer can use those salary sacrifice amounts that they're contributing to meet their obligations, which means that essentially some employers do not have to contribute the 9.5% at all because the salary sacrifice amount is actually satisfying their obligations. So the government decided to change this to close it because it has been a bit of a loophole and has resulted in some people receiving less superannuation than they probably should have, simply for having a salary sacrifice arrangement in place. So the new law is effective from the 1st of January. And it now states that you must pay your superannuation and guarantee contributions on the full gross earnings, so your pre-reduction amounts. So salary sacrifice will not affect how much an employee is going to receive when they get their superannuation. It must be paid on the full ordinary time earnings. So that piece of legislation has been talked about for a couple of years now, so it's actually good to see that that has come in. The other one that we may see soon, and we've heard talk about again for a few years, is the superannuation amnesty. Now, this was first introduced to Parliament back in May 2018, and the purpose of the amnesty was to allow those employers who may have fallen behind on their super and may not have met all of their quarterly contribution amounts to be able to pay those amounts and not receive any additional penalties for doing that because it had been paid late. Unfortunately, the legislation didn't pass. 12 months went by. Some companies did take up the amnesty, but it didn't actually come into effect. So those organisations didn't actually get the benefit of the amnesty because it didn't pass legislation. So it has been reintroduced to Parliament. I believe it has passed some tests, and we're now waiting for it to actually pass legislation again for it to come in. So that's a piece of legislation which we'll keep all of our members updated on. When or if it does come in, because it'll be a massive change as well for that period for super. And the last one that we're looking at is annualised salaries. Now, when we were talking about underpayments and some of the underpayments we've seen this year, quite a few of those have been as a result of annualised salaries, being that the organisations were paying an annualised salary, but it was not fully compensating them for the actual hours that the employee was working had they been paid as per the award. So annualised salaries has been an area that Fair Work has been looking at as part of its 4-year review of the modern awards. And they have introduced some new model clauses for annualised salaries, which is going to affect 22 of the awards. So not every award, but 22 of the awards, some of which have vast reach. They have announced that they are expecting it to be effective from the 1st of March next year. However, the clauses haven't yet been inserted into the awards. So we can't say that date is definite. It could change. We only know that the model clauses have been finalised, and we're simply waiting to see when they will go into the awards. So the 22 awards that are affected are pretty much some of those that are very far-reaching. We're looking at things like the Clerks Award, which most organisations would have some employees under, banking, finance and insurance, certainly the hospitality and the restaurant industry awards, because those are some of the areas where they've seen vast underpayments happening and that we've seen in the media. So these 22 awards will be the ones that will have the additional clauses inserted into them. And the things that you're going to have to look at in regards to these awards are some key requirements that's going to be in the model clauses. Now, the model clauses is 3 different model clauses, so each of those will be split between the 22, but the key requirements under all of them, one of them is that you must record the annualised wage agreement. So most people would normally do that anyway. That would usually be in a contract of employment, that you're recording what the annualised wage is. However, under these new model clauses, you must now specify the outer limits of the ordinary hours and overtime that is satisfied by the annualised wage. So whereas previously you might have seen a contract that said you will be paid X number of dollars and that will include all of your ordinary hours plus reasonable additional hours, it's now requiring to specify what that reasonable additional hours will be. And then anyone who's working in excess of those outer limits would have to be paid as per the provisions of the modern award. So that would be overtime or time in lieu, whichever might be applicable. You'd be required to record the start, finish and break times for each employee that is under an annualised salary under these awards, and to record the hours for each pay or roster cycle. So this is a massive change. Most annualised salary employees who may work, for example, in an office environment will probably not at the moment be doing any time and attendance. So it's going to be a large shift in time and attendance record keeping for employers, and may need them to introduce new time and attendance systems as well, depending on what they have in place at the moment. And the final requirement under the clause would be to calculate the amount that the employee would have been paid under the relevant award for all of their hours of work, and then compare that against the annualised wage. And you need to do that at least every 12 months from the start of the arrangement or on termination of employment. And if there is a shortfall identified, the employer must rectify the shortfall within 14 days. So this is pretty much all we know about these model clauses at the moment. Until they're actually inserted into the awards, there's not a lot of advice that Fair Work is giving. So we're continuing to follow up on that to see when that might happen, so that we can actually give more information to our members. But it's important to know that if you're covered by one of those awards, this change is coming. So you should start preparing now and thinking about how you're going to manage those. So moving forward, how can we safeguard our payroll to ensure that we're always compliant? First of all, regular and up-to-date training. So, you know, there's payroll people, and certainly myself, having been in the payroll industry for many years, once you learn payroll, you think you know payroll and that there's nothing else to learn. But as we've seen, there is so much changing all the time. So it's really important to continually have your regular and up-to-date training, you know, with many organisations that might offer that. You can register directly with Fair Work to get your award updates, and also to get general updates for any changes. So while we are registered for pretty much every single award, all 122 of them, you know, organisations should absolutely be registered for their specific awards, so that they can make sure that they're kept in the loop with all of those updates. You can also register with the ATO for any superannuation and PAYG withholding updates. Again, I registered with them, and every morning I come in and I've got at least 2 emails, one from the super team and one from the PAYG team, with any updates that they may have, which includes every time they update their website with either new information or changed information. So just make sure that you are kept in the loop. You can also obviously join an organisation such as the Australian Payroll Association. We send out monthly newsletters covering the major changes that are happening. So this month, our newsletter included the change to the superannuation guarantee from the 1st of January, and also those new redundancy provisions for your pension age. So ensuring that you're able to stay on top of these things, join an organisation that is actually an expert in them, and they can let you know. And the final one is your process of compliance reviews. Now, whether you're going to do these internally yourselves or whether you're engaged with an external expert, it's really important to make sure that you don't just have a set and forget mentality with your payroll. Things are constantly changing, and it's important to make sure, you know, even when you have turnover in staff, that the new people are aware of what the process of compliance is, and that these things are regularly being checked and audited. So that's pretty much it, Ross.
Thank you very much, Jasmine. We will now open up for a few questions. So if you have some questions, please enter them in to the session, and we will do our best to answer them live. We've obviously got a couple on screen here at the moment.
Yep. So the first question here from Janelle, we have, can annualised salaries be applied to part-time employees? Yes, they can. It's the same concept as if it was for a full-time employee. The annualised salary, you must make sure is covering them fully for all of their hours that they will work, so that they're not worse overall on their annualised salary, that they are actually receiving more than they would have had they been paid as per the award terms and conditions. So absolutely, part-time employees can be on an annualised salary.
What else have we got? Sorry, I've got some here in the chat area. Up on the screen here.
Okay, so we have one about sick leave, about the 10 days. So it's not 10 days extra days, it's actually just 10 days personal leave for every employee. Whether they're a shift worker, whether they're full-time or part-time, every employee gets 10 days. And the value of a day is based on what they would have worked on that day had they not called in sick. So every employee gets 10 days based on their hours in the day that they call in sick. Does the new legislation also include novated leave salary sacrifice arrangements? A very interesting question. We have read the legislation extensively, and it does appear to only apply to superannuation, but we have written to the ATO to ask them for confirmation on that. I did follow up this morning because I requested that 3 weeks ago and haven't heard back yet. So once we have that information, we will be sharing that with all of our members to confirm, but at the moment the ATO has not clarified whether it applies to any other salary sacrifice arrangements other than super. Okay, how do you work out what award the employee should be compared against the annualised salary? So what award they should be on? You need to have a look at what industry you're in and what the role is to confirm what award the employee should actually be covered by. It could be one of many, obviously. So look at your industry and see if an award is in, there's an award for your industry that the employees might be covered by. And if that industry award doesn't have coverage for a particular role, then you need to look at the occupation-based award, for example, the clerk's award. Sorry, we're just seeing if there's any more questions coming through. Here we have 10 days sick. What if each day has a different number of hours? So this is where it becomes very difficult, and where your software provider is probably going to be scratching their heads a bit as they try and work out how to basically update their systems to comply. So if someone, for example, was part-time and did 5 hours on Monday, 8 hours on Tuesday and 6 hours on Wednesday, they would have 10 days. If they took the Tuesday off sick, they would take 1 day of sick leave paid at 8 hours, because that was what they would have worked on that day. If they then took a Monday off sick, that would be another day, so they'd only have 8 days left, and that would be paid at 5 hours, because that is the number of hours they would have worked on that day. So there's no averaging. It's simply 10 days, and 1 day is deducted each time they take a day, and it's paid at the number of hours they would have worked had they not called in sick on that day. Is there a set process for recording start, finish and break times? No, there's no set process. You can use manual timesheets if that's all you have that have to be signed every week. You could have a time and attendance system in place where people are clocking in and out using any sort of software, and there are so many available out there for time and attendance systems with a range. There's facial recognition, there's thumbprint recognition, there's Bundy cards, there's all sorts of different ones. So there's no particular process. You just need to make sure that you are accurately recording those start, finish and break times. But again, until those clauses are actually inserted into the awards, we still need to wait and see whether there's more information about those. And here's another one. What about part-time employees? They get 10 days. So if they only work 3 days per week, they get 10 days leave. Yes, so you're right. This equates to 16.167 days for full-time. So a full-time employee will get 10 days, and that is it. They will get 10 days. Same as a part-time employee, they'll get 10 days. And this is one of the reasons both the government and Mondelez are appealing the decision, because it creates a disparity between full-time and part-time employees. If a full-time employee was off sick for 4 weeks, they would only get 2 weeks of pay because they'd use their 10 days within 2 weeks. If a part-time employee who was working 2 days a week could essentially have a large number of weeks off because they'd have 10 days to use. So they'd be able to take a lot more time off at their full rate of pay. So that's one of the reasons Mondelez has given when in their appeal, is that it's created this disparity for part-time and full-time, because part-time employees can essentially take a longer period of sick leave on full pay. And what if they don't take a full day sick? So if they take a half day sick leave, if they're working 8 hours and they take 4 hours off, then it's simply half a day. If they take 2 hours of an 8-hour day, it's 0.2 of a day, 0.4 of a day. Sorry, my maths isn't good when it's off the top of my head. It's the fraction of a day, whatever it is, based on what they would have worked that day. So what their fraction of a day is. Do apprentices get 10 days personal leave and 20 days holidays? Apprentices get everything that a normal full-time or part-time employee would receive. They do not have lesser entitlements. So yes, they would get 10 days personal leave and 20 days holidays. Is it possible to have an individual flexibility agreement for part-time employees who wish to work outside their normal hours of work? Probably, yeah, but you'd need to just make sure that in that agreement, if they would have been entitled to penalty rates or overtime, if you're not going to pay those because it's the employee that has requested it, just make sure that that is in writing, that it's at the employee's request that they want those extra hours. Do we recommend changing sick leave days before the appeal? This is a really tough one. Fair Work has said that this is the legislation. So if you are not complying with it as it stands right now, then you are actually in breach of the legislation. If you wait until the appeal, then you're going to be in breach for that entire period. So we recommend possibly looking at it on a case-by-case basis because it's particularly going to impact part-time and shift workers. It's not really going to impact your full-time employees. But as I said before, there's a lot of software providers that aren't making any changes until the appeal. So that could actually be a manual process for payroll in the interim. It could also result in claims for back pay in the meantime. If you've got a part-time person who used up all their sick leave and then went on leave without pay, and they should have actually had more sick leave based on this interpretation of the legislation, then there could be a claim for back pay there. So as it stands, this is the legislation, and therefore it should be complied with until we know anything further. Okay, if you're on a rostering basis with an RDO, normally your sick leave is payable or your annual leave is payable depending on what the award says. So each award is different as to whether you might have a full day paid and whether that RDO accrues on sick leave or annual leave. So you'd actually need to check your award for that one. If you're based on a 38-hour week and then you're getting an RDO, each award is slightly different.
Okay, thank you so much. We have now reached 2 o'clock, so I am going to bring the session to a close. Just confirming that the session has been recorded and will be shared with everybody that has been in attendance. Any questions that haven't been answered, we will be downloading from the virtual environment, and we will ask Jazz to just key in the answers so that they're shared with all of you. Hoping that satisfies your thirst for education and knowledge. On the close of this session, you will see a screen that will allow you to learn more about the services and support that are available through the Australian Payroll Association. So please take a moment, if you're not a member already, to get a broader understanding of the capability of the association. Please also take a moment to learn more about Payroll HQ and what we do within the payroll space here across Australia and New Zealand. So on behalf of myself, thank you so much, Jasmine.
Thanks, Ross.
And thank you to everybody who has attended the session. We greatly appreciate your time, and I'm sure we won't speak between now and Christmas, so have a great Christmas, and we look forward to seeing you all back for another learning session early in the new year. Thank you very much.